Great to have your company, and of course Anthony Albanese will be joining our chief anchor Kieran Gilbert on Sunday Agenda this morning, and no doubt they will be talking about housing prices. Well, the PropTrack Home Price Index report has been released today, and it shows that home price growth in Australia continues to slow. Joining me live is economist and author of the report, REA Group's Paul Ryan. Good morning, Paul. How has the market lost momentum? Yeah, good morning, buddy. Thanks for getting up so early for us. How has the market lost momentum, and what can we expect over the next few months?
Yeah, home price growth has slowed throughout 2022 so far. And partly that's off the back of faster than expected interest rate expectations later in the year. Capital city prices were flat in April. Sydney saw their first falls since the start of the pandemic. Melbourne saw two kind of flat months in a row now, and Hobart actually recorded its first monthly fall since early 2018. Now, we're seeing a bit of a two-speed home price market opening up. Brisbane and Adelaide and the regional parts of the country are still seeing quite solid growth, but nonetheless, we're seeing home price growth slow all across the country.
We're less than 3 weeks away from the election, of course, and does that mean it's having an impact on house prices?
So we saw April was quite a disrupted month in terms of transaction activity, both with public holidays in the second half of the month and the federal election campaign. Now, while we saw fewer transactions in the market, it didn't seem to have a big impact on price, we don't think. That slowdown in price growth is something we've seen a trend throughout the year. I think there's a lot of people with a lot of uncertainty about just how quickly interest rates are going to rise later in the year.
It is interesting, isn't it? Because we're coming out of COVID. There is the talk of interest rate rises, but people still have a lot of money in their pockets because saving has been huge the past couple of years. We're allowing international travel to come back. What's driving some of the price falls in Sydney and Hobart, and what kind of areas are we talking about in those cities?
Yeah, so it must be remembered that over the past 10 years, Sydney and Hobart have seen the largest growth out of all of the capital cities. So to some extent, despite that saving, prices may just be getting more stretched in those markets. For example, in Sydney, the median house price is now above $1.2 million. So the outlook for interest rates may be binding a bit more on those markets. On the other hand, we do expect both Sydney and Melbourne in particular to benefit from those changes in the market that we've seen this year. So lots of investors coming back into the market, as well as you say, overseas immigration returning, which increases demand for housing, particularly in the major capitals. Yeah,
we've definitely been in a seller's market for quite some time. Is it folly to start thinking that we're going to move straight into a buyer's market?
So, buyers will certainly welcome the slowdown in price growth. They can be a bit more deliberate in their search. And for first-home buyers, it certainly makes it easier to save a deposit when prices aren't growing at the breakneck speeds we saw late last year. Now, those buyers will have to remember that if this price growth is slowed down because interest rates are going to go up later in the year and mortgage costs are going to increase, they need to factor that into their budgets. Now, for sellers, while prices aren't growing quite as quickly as they have been, prices are still up over 30% since the onset of the pandemic. And a lot of sellers are taking confidence from the fact that they haven't had selling campaigns interrupted by lockdowns this year. So we've seen solid transaction activity, and we expect that to continue throughout the rest of the year.
We'd love to have a crystal ball, all of us, but there has been all sorts of prognostications about when interest rates will rise and by how much. If we wash all the white noise to one side, we are looking at a conservative body on the Reserve Bank at the moment who've been very cautious. No doubt there will be rises, but will they rise as much as some of the extreme views?
Yeah, there's a lot of uncertainty. On one side, you've got the market who I think are pricing the cash rate at the end of the year will be at 2.5%. And then you've got major bank forecasters who are saying, something around 1.25% at the end of the year. That makes a big difference for mortgage holders and for potential buyers. So I think that uncertainty is already something that's weighing on the market. And that's part of the reason why we've seen price growth slow so much.
What do you think? I'm not going to hold you to it. Are you leaning more towards the 1.25 or 2.5?
Yeah, I'd lean towards the 1.25. I think the Reserve Bank's going to take it slow, just given how much credit has increased over the past couple of years in particular. They'll want to see how much increases in interest rates weigh on economic activity.
Yeah, they won't want to shake the cage too hard, will they? They're already, the joint's in reasonable shape, apart from the obvious problems of growing inflation and a few other things that are kicking about. But it's very much on the table, on the plate, on the pages of those that are going for power in this country, and a huge announcement by Anthony Albanese saying that it's going to be up front and centre. This new housing pitch, I think it's going to cost around $380, $400 million, assisting with those trying to buy homes. And I think for a single person, those that will be assisted will be incomes up to 90, and for couples it'll be around $120,000 incomes. And look, it's refreshing and good news, particularly for those in that younger part of our society that just cannot get in.
Yep. Yeah, so we've seen equity policies like this from some of the state governments in the past. Now, as always with policies like this, the devil's in the details. Like, how does the place limits and the price limits and the income limits all interact? Does that actually allow people to get into the market? But certainly it recognises that the hardest thing for first home buyers at the moment is meeting that deposit hurdle. So I think it'll be really welcome for first home buyers across the country. And yeah, I think housing affordability has gotten to the point now where it's a key political issue for this election.
Just finally, and not completely off topic, but people have been liberated. Many people have been liberated by property over the past couple of years, haven't they, financially? The amount of money that some people have made through this pandemic the past couple of years is just off the charts.
Yeah, absolutely. The price growth we've seen over the past year in particular has been astronomical. The highest price growth we've seen in 30 years, the third highest episode of price increases in Australia's history. So it's certainly unprecedented to see prices grow that much. And that's part of the reason why price growth has slowed, is that price growth just couldn't continue. But yeah, we've seen that big preference shift following the pandemic towards regional areas and people moving to larger homes to take advantage of remote work opportunities. And that's partly been funded purely by that increase in wealth that so many Australians have seen. But in saying that, first home buyers and renters across the country have been kind of locked out of those gains. And that's, I think, why the housing affordability continues to be that political issue.
Paul, it's been a real insight. Congratulations on the report, and thanks so much for coming on the show this morning.
Fantastic. Thanks for having me.